everyone, today is Friday, December 17th, and I'm glad to share my regular market review prepared for InstaForex. ECB predict confident economic growth in the UE until 2024. In the press conference, Christine Lagarde assured the market that everything is under control. Don't worry, be happy, that's her message. When it comes to the US stock market, Apple's and Tesla stocks are trading lower. Tesla is to blame for a plunge in the stock market. Apple went downwards yesterday. Oil prices climbed yesterday, thus suggesting good opportunities for selling. Now let's discuss our technical charts. The first asset to discuss is gold as usual. It is extending its growth. Before the Fed's policy meeting, I told you that there is some room for a decline in the gold prices. The first target was broken with a fake breakout before the Fed's meeting. The target was broken during the policy announcements, and then the price rebounded during the press conference. Great! The target which we had been hunting for was eventually hit at near 1,798. Now gold is trading above the round level of 1,800. Many traders are wondering whether it makes sense to enter the market amid the selling impulse that I told you about. Before breaking the target, I suggested the selling scenario after a breakout. That scenario was reasonable before the breakout of the first target. In fact, we saw a fake breakout, so we don't have a proper target to hunt for. Hence, I cancel my trading idea for the downwards move. There is an old, powerful target at about 1,675. But the nearest target at 1,730 was broken on the news. So the selling scenario for gold is cancelled. In this context, all previous metals received a boost. Silver, platinum and palladium went upwards. Palladium is the most promising asset with a clear-cut bullish outlook. I guess it offers the most gainful opportunity. Silver is the second lucrative asset, platinum is the third one. I see the bearish overall trend for platinum. So what's going on with the euro-dollar pair? What do I expect for this instrument? I'm anticipating that a swing high triggered by Jerome Powell will be updated. I have been hunting for this target for a long time, though I have failed a lot of times. At least I entered this impulse. Yesterday the price retraced to 61% Fibonacci level. I expect sellers' stop orders to be triggered at updated highs. The price has to go 60 pips on the whole. The overall price action is cool. The price has already moved 160 pips upwards. Yesterday the price updated the high of December 8th. 1.1380 is the level where sellers place their stop losses. I reckon the price will climb to 1.1400. Christmas is the time of miracles, even on Forex. The Bank of England raised interest rates yesterday. The sterling jumped immediately. The pound-dollar pair found double support. On the one hand, the US dollar lost its footing in light of the Fed's decisions. On the other hand, the sterling strengthened on the back of the rate hike. Both currencies gave predictable responses to announcements of the central banks. Sometimes currencies slumped on the news about a rate hike that is against market lows. This time the currencies responded all right. I want to remind you about the extremely ambitious plan for the sterling. The pound could shoot as high as 1.44. I told you that my idea is crazy, but it's getting more probable amid the greenback's weakness. Personally, I wouldn't plan any big short positions on the pound-dollar pair. The dollar-yen pair. The dollar-yen pair is developing the third wave that was expected long ago. Yesterday I found evidence that my scenario can come into practice. Those traders who are not taking advantage of the US dollar weakness against the euro or the pound can open positions based on the greenback's weakness against the yen. Perhaps it is a bit too late, but this scenario is possible. I'm showing you waves A and B on the chart. Now wave C is in progress. that should bring the yen to 120.5. 100 pips are left until this level. I hope this idea will be implemented in the near future. So that's all for today. See you next week. Bye bye.